Happy Friday, everyone. Welcome to the Wall Street Blockchain Alliance's Crypto Roundup. Today is Friday, June 26th, 2026. David, we're almost halfway through the year. For everyone in the audience, thank you so much for joining us. Ron Quaranta here with my amazing co-host, David Brill. Somewhere is Joshua Ashley Klayman. David, we'll figure it out when the Gulf Stream lands. Again, for everyone in the audience, thank you so much. Our usual disclaimers, obviously nothing David or I or Josh discusses any sort of investment or legal advice. And really the discussion topics are our own personal opinions, not necessarily the opinions of our respective firms. David, there's so much going on. It's hard for us to come up with a description for the session in advance. We had negative price action, but we're up 1.5% on BTC today. The macro headwinds, there are a couple of nights where it's approaching hurricane force in some places. And strategy still got some challenges. David, what are you seeing in the market?
Well, I guess if we had to put a title, it might be Timber. It's an old school reference for folks, but
I'm with you.
Look, I think right now we have a macro issue, not a crypto issue.
Yeah.
And the macro forces are really affecting the market. And I think, you can see, Bitcoin is sitting right at 60,000, having bounced off a 21-month low of 58,115. ETH is still under 1,600, which is on, another low number. And that $60,000 number is a really psychological level for Bitcoin.
Yeah.
And it's the same level that miners start approaching breaking even, and where long-term holder conviction gets tested.
Yeah. And David, you and I text a lot with Josh, but one of the things you sent me this morning, I haven't had a chance to respond, was a really interesting statistic. 11 million BTC are underwater. Did I read that correctly? Out of the 20 million plus that are out there?
I'm not totally buying the methodology behind it, but that's definitely been circulated quite a bit. So, I think that is an important, data point. And then obviously what's going on with strategy is really important too.
Agreed. You want to talk about that? Because I think Saylor's painted himself into a box.
Yeah, I think we should let's talk about the macro first and then go to Saylor, because I think the macro is sort of driving everything that's coming our way, and Saylor sort of caught up in the waves.
Yeah. So, I'll dive in there, David, because we talk about it a lot. The macro picture gets muddier by the day. There's a couple of really big headwinds. Let's talk about the economic data. And for everyone out there, David and I swapped text messages and Slack messages about economic data all week long. This week we got PCE, personal consumption expenditures, from the U.S. Fed, which is really their preferred measure. And I believe the number was something like 4.1%, one of the highest inflation ratings since I think March of 2023. So those inflation numbers are pretty scary. David, you and I often say it's not the data, it's the revisions. I agree with that. Let's put that to the side for a moment. One of the important parts of all of this is you have to strip out the outliers of data. And I know this drives some people crazy.
Yep.
You got to strip out food. You got to strip out fuel. Simply given their volatility from day to day, it's hard to build food and fuel into an inflation gauge, right? By way of example, 4.1% came out with pretty high spikes in food and fuel. 2 or 3 days later, a week later, Strait of Hormuz opens, Brent crude's down to $70 a barrel.
Yep.
It was 90 when some of these data points were seen. Anyway, the point of all of that is inflation may be becoming structural, and that's a broad macro problem. Apple's raising the price of iPads and MacBooks by, $200 per, because we have chip shortages. The inflation issue is percolating through more and more of the economy, and that's what concerns me.
Yeah, and look, that isn't going away, like you said. And look, I think it's time for the Fed to come out and just say, 3% is the new normal.
Yeah.
I think if it did, then people would react better to these different, peaks and valleys, because 3% is a more realistic number.
Right. And, that may be coming. Like when, the new Fed chair, Kevin Warsh, is in place, he already wouldn't, and we talked about this last week, wouldn't add data to the dot plot. They're probably going to eliminate forward guidance, which honestly would be the best thing the Fed could do in the past 20 years, because their forward guidance makes market participants respond to Fed opinion and perspective versus the actual market conditions.
Yeah.
That's a problem. And I think if they make that go away, and if they settle on 3%, I think that's better for everybody.
Yeah, and also, the June dot plot was revised. It's Q4 2026 core PCE projection up from 2.7 to 3.3%. And the Fed's 2% inflation target is just not being met.
Yep.
And, the Fed's own projections show it getting further away through 2027.
Yeah.
Why not just take this moment and just say, you know what, either we're not going to have a baseline projection, which I think is a little too much of a reach at this point. But
Yeah.
just say right now we're going to go with 3%. And it's more reflective of like what the economy looks like on an ongoing basis.
David, you and I talked about this a long time ago, and it's worth talking about the history of that. And I don't want it to be, monetary policy conversation, but it is an important part of the macro. People don't remember the 2% target came out of the great financial crisis.
Yeah.
When interest rates got pulled down to zero for a prolonged period of time, which is not the norm.
Yeah.
In the history of, Western countries, you don't have 0% interest rates, you don't have free money. We can have very complicated conversations about the bubbles that might have created and the real estate bubble and on and on. But 2% in the long history of interest rates is not the norm. So to your point, why is it there?
Look, I think it's hard to sort of admit that we're not going to have, we're not going to have 2% inflation anymore.
Yeah.
And somebody just needs to rip the Band-Aid off. And I wanted to, I made some notes I wanted to share with people about how I've been trying to tie it all together. So, and I think for our audience, high inflation means that the Fed stays or on hold or tightens. And for instance, B of A is now calling for 3 rate hikes in 2026, which I do not see.
I don't see that at all.
And Deutsche Bank is calling for 2 starting in September. But a stronger dollar, which is at like a 13-month high, makes Bitcoin less attractive to global buyers. And tight liquidity drains the speculative risk appetite that drives crypto bull markets. So what's happening is there's this like cruel irony right now. Inflation is exactly the macro environment where Bitcoin's digital gold narrative should be winning.
Yep.
High inflation, monetary instability, currency debasement, that's Bitcoin's thesis. However, in 2026, with the risk-off trade dominating the inflation hedge trade, until the Fed pivot, signals that they're going to, plan on reducing interest rates, Bitcoin trades as a high beta risk asset and not a store of value. And that's really, hopefully I didn't say that too fast, but that hopefully ties it all together for people.
Yeah, it makes sense, David. And, you mentioned this in the green room, right? This is not a crypto story per se.
Yeah.
Crypto's caught up in the macro story. And we saw that play out this week. You and I have been talking about for weeks these parabolic moves on AI and chip companies. I'm a big supporter of innovation. You and I both are. We get where this might be going for AI. We get this world-changing technology. The price appreciation on some of them was a little crazy. So that, of course, hit the AI markets. We saw several $100 billion wiped out in some of these AI and chip firms. David, correct me if you disagree, but I don't know that that's necessarily a bad thing. I'd rather the steam come out now than later.
So I only disagree with you that I think that the memory chips are undervalued based on the earnings that Micron came out with.
Yeah.
I think their PE is still I think it's around 8 or 9 at this current, earnings level. I would take a different tact. I would say that the innovation of the future, we are paying the price now in memory for the innovation of the future.
Yeah.
Because if we think about all the memory that's needed for AI, let's not forget that I think for humanoid robots, it's going to be like 5x the memory.
Yeah. Fair.
So unless innovation occurs that happens to, lessen the memory crunch or find a way to deliver or need less memory, I just think this is going to continue to grow. So I think now is just sort of, we're in the major CapEx phase for the next sort of AI humanoid revolution.
I agree with you there, David. I think it is interesting when you look at the data. There are chip producers which on a PE basis are undervalued
Yeah.
generally.
Yeah.
And there are chip consumers, which are way overvalued in some regards. But here's the fundamental problem that no one's answered for me, and the answer can't be government, but how do we make up the chip shortages? How do we produce more chips?
Well, look, I mean, a thesis that you and I have had for a while is we want to bring more things onshore.
Hmm.
And if there was, I don't have an issue with the government making strategic investments in companies to help them build things here so we're not relying on other countries. So if we were to invest some money to help build some chip plants here and the consumer were to get his money back, upon production, like I'm okay with that. I
Yep.
don't have an issue. We spend so much money, Ron. I don't have an issue if we maybe subsidize building a few chip plants and get our money back out after they go online.
Yeah.
I'm okay with that.
So I disagree slightly, and I get the perspective. I'm with you. Incentivize companies for production onshore. I do not support this kind of growing mindset on both sides of the political aisle in the U.S., which is we should own half of all AI companies, Bernie Sanders style,
Yeah,
because national security and the benefits are only accruing to the richest. That's a very misguided perspective on innovation to me.
I agree. I'm just saying that I don't mind the government providing some of the CapEx
Yeah,
and making sure that we get paid on the back end when it's up and running.
or provide the tax incentives for the development onshore.
Yeah, yeah, I'm fine with that too. I'm
Yeah,
fine with that too. Look, this is the wave of the future. We need to have production here.
yeah,
I feel very comfortable if we were to subsidize some of the, you know, productions of the plants and developing the plants and tax breaks, we could certainly structure in a way that we would get the money afterwards.
yeah. David, I'm going to rip up the script a bit, but I
Okay.
think it's still related to what we're talking about. And you and I and Josh and so many of our colleagues in WSBA follow a lot of different things. Although Josh is following photonics and quantum, and I just can't keep up. But one of the challenges for chip production and manufacture has been rare earths.
Mm,
And I'm actually reasonably pleasantly surprised, given some of the work the United States has done and companies in the United States, to really find alternative sources of rare earths. Because for everyone in the audience who may or may not know, and I'm probably screwing up the number, David, but something like 90% of all the production ready rare earths come out of China.
yeah,
So that's clearly a geopolitical risk.
yeah.
Are you seeing that same kind of evolution, and does that bode well for us?
I haven't followed that piece of it as closely, but we do need to have a steady supply of it.
Yeah,
I do think some of the issue with what's gone on in Iran and the Strait of Hormuz relates to some of those rare earths and being shipped to the U.S.
yeah,
or not being shipped to the U.S. So look, I think one of the things that we learned from the COVID crisis is that we need to bring production onshore. We
yeah,
cannot rely on other countries for production of things if there becomes an emergency or there become shortages. Like we can't assume we're going to be first in line.
yeah.
So
And
I do not believe in socializing any of our, you know, private companies, but I don't have an issue with us making strategic investments in them.
yeah, and to be clear for everyone in the audience, I think David, you agree. I'm not talking about isolationism in the old
Yeah.
world kind of. I get it; it's an international world, but we shouldn't run short on things that citizens of countries need on a potentially on a day-to-day basis. And by the way, I was going to talk about New York elections because you mentioned socialism, David, but I scratched it out of my notes. I thought better of it.
Some things are better left unsaid. We could just leave it at that.
Yeah, I'm with you, buddy. I know I don't think we'll get Josh something about Starlink on the Learjet, David, but we do have to talk about clarity. And we had a couple of working group meetings in the past week or so. I've been privy to some of those conversations. Shout out to Adam Goldberg. If you're out there, buddy, let us know. Shout out to Dina Ellis and all of our policy experts that we speak with. It's looking a little bit grim, David, and politics is kind of the word of the day. What are your thoughts? Do we get clarity by July 4th? I just don't see it happening.
It's really interesting. I came across something that I thought was interesting that Galaxy Digital made a $10 million institutional prediction market trade on Clarity passing in 2026. I don't know if you saw that.
I did not.
But I thought that was really, really interesting. So, let's talk about the precise state of play because the
Yep,
headlines are misleading.
agreed.
I think being placed on the Senate legislative calendar is not the same as a scheduled floor vote. And I think we saw that flowing around on X.
Hmm.
It just means that the bill is in the queue and Senate leadership still has to schedule it.
Yeah,
So that scheduling decision is probably the most consequential variable in our, crypto policy right now.
yeah,
It feels like the ethics provision is the main issue remaining,
yep.
and I just have to feel that there will be some way to resolve that. I mean, we have a fundamental issue regarding trading amongst people in Congress, and I think at some point that has to be addressed.
Hmm.
But I don't think crypto should be treated any differently than any other
Yeah.
asset. Um, Senator Lummis has been out there beating the drum too, so
Yes, very much so.
it's I think that we need to get to a place where we could just find some compromises on these things. And what I would say is we shouldn't, make ethics in crypto the main issue to stop it from being passed when, you know, it shouldn't be treated any differently than other asset classes. And so if you're going to try and do that now, that's a mistake.
Yeah.
And the last thing I'll say is, Senator Lummis, I think, said it best. She said, software developers shouldn't need an army of lawyers to know if their code is legal. And she's right. But until, we figure out how to resolve a provision that's fundamentally about whether, you know, elected officials and the executive branch can profit from the industry that they're regulating,
Yeah.
but that's not a legal problem, that's a power problem. And I think a power problem is sometimes the hardest to solve on a deadline.
Yeah. And I think, the sad truth of the matter, David, is it's the politics of, backroom engineering. I'm sure there are some bills on the docket that if there is some accommodation and some horse trading, this ethics stuff will in some way be agreed. I just hate to see it about a specific president or member of the executive branch, for example. And again, politics aside, then those rules should apply to all. It should apply to the executive. It should apply to folks in the House. It should apply to folks in the Senate. And it's that lack of even-handedness that always makes these things grind to a halt.
Yeah. And look, you can see these different posts on X about different Congress people who, making hundreds of trades, stock trades, option trades, and enriching themselves from it on both sides of the aisle. So, I think it's just fundamentally an issue that needs to get resolved broadly.
Yeah.
But I don't want it to see that be the issue that sort of prevents us getting clarity.
So I want to remember if I heard this correctly. Galaxy has a $10 million wager.
According to X, they have a $10 million wager. They placed it through, I'm just going to find my notes here. They placed it through, I think, their own prediction market that Clarity will pass.
Oh.
I mean, I think that's a bold take. I could try and look at Polymarket while we're on right now, or Kalshi to see, what the latest is. Yeah, it was executed through Galaxy's institutional OTC prediction market offering with Arca.
Wow! Listen, that's a committed bet right there.
Yeah, and that's a bet made by an interested player. So it'll be interesting to see how that plays out.
It will be interesting to see. Josh Klayman, I'm assuming you're off the Learjet or the Gulfstream. Which one is it this week?
Well, it was a plane, but
I feel the
apologies
story.
for my late arrival. I was putting out some proverbial fires.
No apology necessary, Josh. Josh, it's good to see you. Your timing is kind of impeccable.
Yep.
Because we were talking about clarity in Washington and politics and sausage making, and we need you to win.
Well, you guys know I don't cook, so so I'm not a great expert at sausage making. But yeah, guys, I mean, what's going to happen? Did you guys already say that?
We
Did you
already
say
talked
you
about
agreed?
it, and David talked about the news that Galaxy put in a $10 million bet on its own prediction market that clarity gets passed in 2026?
Good job.
Like, did you notice that Josh needed to take a deep breath before she answered that, David?
You know, I want clarity to pass so badly, and I would like to say yes, it's going to pass.
Yeah.
At the same time, it's been drawing on for so long that I do have concerns at times that we are finding ourselves within an echo chamber of people who really want it to happen.
Yeah.
And so that is where I'm coming out right now, which is, yes, I want it to pass. Yes, I hope it passes. Yes, it's moving towards that. Right? We had like the House Financial Services. We've had some hearings and other sorts of things. I think Galaxy putting in that bet, clearly that's a great sign. I just fear that we may be surprised. That's all.
Josh,
That's
to that,
I'm going to take it.
yeah, no, look, to that point, I'm with you, and I want to be hopeful, but I'm going to go back to something we say almost every week. Since January, the three of us and Adam Goldberg and so many others are like, if this doesn't get passed by February, it's not happening, or March, it's not happening. And as more time goes by, it keeps getting pushed. But we're literally at the calendar may end at some point soon, and it won't pass. I don't think we get it for July 4th. I think Adam mentioned, and a couple of colleagues in DC, there is a window in the August, right after the August recess. But after that, it's hit the stump re-election time. And no one in DC will give a crap. They'll hate each other and just want to prevent anything from moving forward.
Yeah, I mean, I'm also trying to think when I think of the past and I think of Fit 21, right? And then I think about the DCCPA.
Yep.
Right, and some of the other versions that had come along. I think at one time we were calling something the Lummis-Gillibrand bill, right?
Oh.
There were a whole bunch of precursors. Like at times in the media, it's and if you talk to people, they're like, it's going to pass. These are going to pass. Everything's going to pass. And then they didn't. And then some people said, well, it was never going to pass. The idea was to take pieces of it and bring them forth. And so I think that's where I'm coming out, is that I feel like at this point in my mind, while I want it to be like, yes, it's going to happen, I really feel like it's 50-50.
Yeah.
I really feel like it's like a coin toss.
So let me ask this question.
Audience.
Yeah, no, Josh, so let me ask this question, because I had a conversation with some folks yesterday specifically about this topic, and someone in the call mentioned, well, hey, look, Ron, what the SEC and CFTC have done so far, they can't pass legislation. Obviously, they're regulators, but that might be enough for us to continue to move forward. I don't.
Oh, sorry.
It's much better, but we still need legislative guardrails, no?
So yes, we do. At the same time, I 100% agree that what's been done and what continues to be done is really moving things forward. I think that it's also possible we get judicially made law, right, as opposed to just statutes, if statutes are harder. But yeah, I mean, I think the kinds of guidance that the SEC and the CFTC have very helpfully given, and the OCC, frankly, and others have given, are really advancing the ball in meaningful, powerful ways. I think the challenge just is that in the event of a challenge, because if you think back to what happened when we were, as an industry, taking the opposite position, saying, oh, this is outside of the statutory authority of the SEC, for example, that was a different, it cuts both ways is what I'm saying, because we don't have Chevron deference. But I do think, and I may have said this on other shows before with us, the fact that all these agencies are coming together, and particularly the SEC and the CFTC, to say, like, here's how we're working together. We have an MOU, like we're on the same page. I think it gets harder to say, oh, this is outside of everybody's regulatory purview.
Right.
Right. So, but yeah, I mean, I think that the regulators are doing all they can and doing a lot. And I think it's giving us lots of paths forward. Yeah. But in terms of
I agree with you, Josh. And I would think that an innovation exemption from SEC would really be helpful for the industry, but I just don't know where that sits right now.
Yeah.
So last week we talked about, I used the phrase financial engineering, and Josh educated me and went through the specifics of the
I think you educated me because
and I sung the praises of the SpaceX IPO. David, I spent a little bit of time researching where we are with strategy and stretch, and I feel like they've financial engineered themselves into a pretty dismal place right now. I'm not as smart as that team there, but tell me if I'm overly pessimistic, David.
Look, I mean, I think ultimately it comes down to where the Bitcoin price is going to be.
Mm-hmm.
The Bitcoin price goes back up to 75K. This isn't as much of an issue.
Sure.
If we languish here, and I think we can take credit for ourselves because we've talked about here that we were going to go below 60. And I think I'm pretty sure we said that I thought we would tag 50 or 55 at some point.
You did.
That's where it becomes a problem. And I guess, look, people were investing in STRC saying, oh, this is great. I'm going to get 11.5% every month.
Yeah.
But now, I was just looking at the par on the shares are trading at 75.
Yeah.
That would be like almost a 14% interest rate.
Right.
So I think what's really interesting is what happens in June 30th is 4 days away. Strategies ex-dividend date and monthly STRC dividend resets. I think that's when it gets curious to see what happens. Could they change the interest rate they're paying? Would they? And I just think the other thing is if we break below 55,000, I think it becomes an even more startling conversation, and it will get even more attention.
But David, I don't disagree with you, but here's what I'm struggling with. Josh, David, tell me if you disagree. Smart group of people.
Yeah.
Strategy, right? And I'm not doubting Saylor, and I've been generally a fan of what he does. I struggle with the how of how he does it sometimes. But if you imagine this flywheel of buy Bitcoin, issue preferred, pay a yield, prices go up, buy more Bitcoin, continually circulating and feeding itself, how do you structure this flywheel of purchases and preferred dividends without accommodating the fact that Bitcoin might go down significantly?
I mean, I think that, look, I think that the flywheel gets questioned even more if it goes below 55K. Because they have 1.2 billion in dividends that have to be paid. And, that's a lot of money.
Yeah.
So yeah, I was looking before, the Avenue dividend obligation is now 1.2 billion.
Yeah.
I mean, I guess they could sell more MSTR shares to raise money, but I do think that they have a structural problem when the price point is where it is.
And David, for everyone in the audience, and Josh, you and I have spoken about this, and we know this is for the audience. There's only a certain number of times you can go out to the market and say, give me money, in the face of a declining price or asset that you've kind of wagered all of these fundings for.
Yeah.
I don't even know what the rest of their capital structure is. You can't go out and borrow continuously without impacting your credit rating. You can't continually issue different tiers of preferred stock with a yield that is generous at the most. I mean, I guess the question, Josh, is does he end up being forced to sell more Bitcoin, which would be a negative kind of accelerator for some of this?
So for various reasons, I don't want to specifically, I have to be careful about specifically addressing this. Fair. But so maybe I'll just pause for a moment till I have something that I can add on this. I feel leverage is a double-edged sword, right? Yeah. And
no, look, and I remember the old corporate finance days where I'd have to go through models of what is the optimal capital structure, right, Josh? Like how much equity, how much debt, how much preferred debt, and there are optimal solutions for that. That became a lot harder in a crypto age.
Yeah, I think that we support, entities buying Bitcoin and holding it on their treasury. I think that's something people can get around. I just wonder how much stress the model can take if we stay below 55 and get to 50 for how long. Look, it could be really transient too. Like we could have one more big whoosh down to 50 or maybe 45 or 40, and
Mhm.
things rally. We could see a big buyers coming in too.
Yeah.
So it just may be a timing issue. But
Yeah.
the last thing Josh is going to say, it's just a matter of like, can you survive the downturn if by like September, October, things are on the upswing again.
I know this is nothing to do with it at all, like literally at all. When I say this, you guys are going to be like, Josh, please, like, stop thinking. But when I just heard you say like having to like go, there's only so many times you can continue to go to the market if the asset is in decline. It just made me think of REITs for some reason. I
Yeah.
mean, REITs continually go to the market and have to pay out dividends. I think like 90%. And I guess if real estate is down, I'm just trying to analogize this here, but I realize that this is like so far out of left field. Anyway,
But it's a good
that's
analogy.
my thought.
But it is a good analogy,
Is it?
David. I don't know
Okay.
if you noticed how elegantly Josh is like, this has nothing to do with anything. So let's move off this topic and we'll talk REITs. But it is a good analogy, Josh. I really appreciate it.
Well, I will say this with the REITs, even if there's not full occupancy, there's income coming in from the property. If it's an office building, there's a tenant or tenants that are paying, and so they're paying out, some percentage of all the rents that they're collecting from the leases. So whereas here, if MicroStrategy got to a place where they were lending Bitcoin, and we're doing other things with it, and by the way, lending is a whole nother issue. But I'm just saying there's no steady stream that they're getting from just holding it. So that's probably the one big difference.
Josh,
I am going to pivot, Ron, and just say for next week, I had a great question from somebody who asked me to talk about this today. Was like, they said to me, I don't understand the tokenizing real estate. Isn't this just a REIT with a fancy name?
oh my God.
And so we were having a discussion about that, but I think that'll be a next week one, Josh, because I think that's something in your wheelhouse that you could talk about. But it was a really funny conversation from a really smart real estate guy who said that to me.
It's definitely going to be a topic for next week because I had a conversation with some real estate folks, super smart people. It just feels like everyone's slapping tokenization on top of their masthead, David. And why in some of these instances? What does that mean? What is the benefit there? And I still worry that too many people don't understand what it means. I feel Josh wanting to refute what I just said.
No. I'm observing. I'm observing. I'm observing and holding my comments for a moment. What did you think I wanted to refute, Ron?
Everything I said.
Which particular aspect of it?
That people say the word tokenization, throw it on their letterhead, and suddenly they're a tokenization company, but they don't have a good use case. Discuss.
And I'm refuting it because why?
Maybe I'm wrong. Maybe there are some industry participants who are getting into tokenized assets like real estate who have a really good solid model. I've just not fully seen it yet in some of them.
So what I would say in real estate in particular, I think that's a tricky one, of course, because to truly tokenize real estate, you have to think about, okay, well, you've got the county level filings, right? Like there are actually like filings that would need to be made.
Like on paper.
On paper in an office.
Yeah.
Like, so that is something where in projects that I've talked to where they were like, oh, we're tokenizing real estate, when I actually have drilled down to them. And I'm not saying that there's no one who's solved for this, but generally speaking, when somebody comes to me and they're talking about that, I bring that up and they're like, oh, well, actually, this happens a lot. When I talk to people and they tell me that they are, I shouldn't say a lot, but it happens a fair amount. They tell me that they're tokenizing some kind of assets that they have.
Yeah.
When you drill down, they're actually trying to tokenize the cash flow.
Mm-hmm.
Right.
Mm-hmm.
Yeah. Which is just a different, the other parallel there is, are they tokenizing an SPV related to an underlying versus actually tokenizing the real estate that is the thing, the building? And I think that's a much harder thing to do. A lot of it comes down to, is this a digital twin or are you actually tokenizing what you think you're tokenizing? I think I've got a couple of announcements for the group, but Josh, I do want to point out one thing. I don't know if you've noticed, I haven't seen Amber at all, and I realize why. We haven't asked about alts. David, what is alt season? It's actually around 47 of 100. Where were the alts, David?
It has just been really rough for the alts right now. And it's really what we talked about. The liquidity's gone into prediction markets, into AI. I've messaged you before that the chip stocks have been like the alts of a few years ago, running up, except this time on earnings. And, they've been a much more interesting part of the market than unfortunately alts have been.
Yep.
Again, some of these alts are now below where they were 5 years ago.
Yeah.
And with all the progress that these companies have made, it's starting to be a real structural problem. And I think we're going to need to see, Bitcoin and ETH really rally before we, see some life into the alts.
So I hold Shiba in vain, is what you're telling me.
I think for now, Ron, Amber was asking me when would be a good time to make an Amber coin, but I'm not doing that.
The day you want that done, we hit the polls.
But no, it's really unfortunate. And there's so many good projects. Josh works with some of them. I've worked with some of them. Some of them are members, and they're just the tokenomics need to change as far as how people view them externally outside the industry to get people more excited about buying the tokens.
David, Josh, we're running a little short on time, usually because my calendar's a mess, as both of your calendars are messes as well. I want to do a couple of shout outs if you'll both indulge me.
Sure.
I had a conversation with a big fan of David Brill and Joshua Ashley Klayman. He's visited the show in the past. Rumi Ofi, pardon me, in Nigeria, who is he chairs the Virtual Asset Service Providers Association of Africa, and is also doing Decentralized Nigeria, which shockingly you are both invited to. I think I might have gotten left off the invitation, but Josh, you may have to power up the Gulf Stream for August. But we have fans and friends and colleagues in the industry watching us in Africa. I also want to do a shout out to, and I believe it's Sophie Nappert in the UK. Sophie, thank you for watching. You're awesome. Please hopefully add comments. But last announcement is we're taking some time off, Josh and David. Next Friday is it Friday or Saturday? Is Independence Day?
Next Saturday is July 4th.
Yeah, well, July 3rd is going to be a quiet day, and I have family telling me to take Friday off or else. I'm assuming you both have likewise.
Yeah, I'm looking forward to the 250th anniversary. This should be really fun. Looking forward to some fun events down here.
You doing anything special, David or Josh?
I am going to a barbecue and be on a boat. I think that's like as American as we can make it.
Josh, did you catch that? I'm going to be on a boat that's like 100-meter long yacht out of the Miami Marina. Josh, what about you?
That's for next weekend, though?
Yeah,
is that right?
Next weekend. Where does the time go? What are you doing this weekend?
Oh.
I'll go after you.
I got to pause. I got to stop us for a minute. Have you noticed, David, that Josh does not want to weigh in on anything?
I'll weigh in. I thought I should be polite and let that go.
Go ahead, Josh.
So this weekend, I will be spending some time with my kids. I just got back from London early this morning. It was hot. Oh my gosh, they're having record heat waves. And I may or may not have stayed in a hotel without air conditioning. But it did have an oscillating fan, which I kept on me at all times. Yeah, but anyway, I survived and I'm stronger for it. But I will be heading back to London Sunday night, and I will be there through next Thursday, heading back on Thursday again. So I'm really getting to know and love London, although I've been there many times over the years. But as I think you guys know, we have a combination that's coming up of my firm and another firm. But I will say also, just in terms of fans, I will not name names. However, when I was at the GLG conference, while I happened to be in London, my colleague Sarah was actually speaking there about digital assets, someone came up to me and said that he is a big fan of our roundup. And so I won't say who it is, but yeah, it was fantastic. He's another lawyer in our space. And yeah, if he's listening, please feel free to chime in. I just don't want to use your name without
You'll
permission.
tell us offline, correct?
Yeah, exactly.
David, Josh, we're going to leave it there, but one more time, if you'll indulge me, I've got one more shout out to do. I want to do a shout out. I'm going to be spending some of this weekend reading Hold On for Dear Life by our friend Annalise Osborne, who just published. It's on Amazon. I'm speaking to her on Monday. I've started reading it. A fascinating read. David, we should get the movie rights because that's definitely going to be a Netflix movie at some point. I don't know if either of you have seen it, but Annalise is really, really a dynamo, an amazing member of the industry. Josh, you've got something left and I cut you off. Go.
Oh, I just wanted to say, I don't know if you guys discussed this before I joined, but earlier this week, there were 2 executive orders from the White House on quantum.
Oh, yes. Speak to it, please.
No. Yes. So I would say one, like if you think about how we've talked about how the White House has been treating generative AI, right, as a race to the moon,
Yep.
an arms race, a talent war, imagine the same thing for quantum. And I think a lot of some formal timelines were laid out for those who contract with the government, et cetera. That executive order was very much focused on risk and trying to shore up against, adversaries trying to attack U.S. interests, economic and otherwise. And then there also was an executive order that really was focusing on opportunity and how do we, as a country, the U.S., I shouldn't say we because there's other people watching from other countries, but how does the U.S., it says remain, but I mean become, remain, however you want to say it, dominant in this industry. So we'll be publishing some stuff on that very soon. And I'm sure it's something that will be a topic of conversation in our new quantum and AI.
The second Tuesday of every month. Josh, hopefully you've gotten the invite because I've already gotten the notes about, will Josh be talking about this topic? And my answer is always, sure, absolutely, ask her. Josh, quick question. Do you, and you don't have to name names, obviously, but are there quantum clients, David and Josh, crossing your desk at this point? Really interesting. I mean, it is a fast-moving industry now.
Yeah, I mean, speaking solely for myself, I think there are a variety of projects at different stages that are focused on quantum right now, or quantum resilience, or quantum readiness. But there also are some hardware-related projects that some of my colleagues are working on as well. So we also have gotten inquiries from really household names that have nothing to do with quantum, right? But they're looking to think about how they can begin attaining quantum readiness. And that's a long process, as we've talked about.
We definitely do not have boring lives with so many of our friends and colleagues. David, Josh, we're going to leave it there. It's so good to see you both, as always. David, expect multiple text messages from me about Bitcoin's price over the weekend. Everyone in the audience, if we missed anything you want to cover, info@wsba.co. We'll definitely get back to you. We'll be on hiatus for a week, but we'll be back with news, commentary, and I still won't make price predictions. David, Josh, thanks so much, everyone. Take care. Have a great weekend. Bye-bye.
Take care, everyone.